You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it's time, once again, for Volatility Views, the premier program for volatility traders. My name is Mark Longo, and if I sound a little bit different, a little bit more sun-drenched and seaside, that's because we're out here not in the Chicago Options Insider HQ, the studios. No, we're actually out here oceanside here in San Diego, Coronado Island, for good old Stocktoberfest. So where it's a change of venue, also a change of recording day. So I apologize to all of you who were looking forward to your regular dose of Vol Views on Friday. We just couldn't make it happen with the conference schedule. But never fear, we're going to get you up to speed here on Saturday, and this show will come out as it normally does on a Monday morning, so you guys can get your hot dose of volatility action for the week. And of course, where can you find all that great goodness? If you're new to the show, maybe for the first time, and you're saying, hey, where do I get some of those great archives you're talking about? Well, of course, the easiest place, theoptionsinsider.com. While you're there, got some great breaking news on the options market, unusual activity, all that fun stuff, as well as, of course, the 14 other programs on the old network. So we'll keep you busy. Don't worry. And of course, you can always find us iTunes, TuneIn, Stitcher, Google Play Podcasts, all those fun places. And of course, the app stores on those outlets as well. So if you want the Android app version, the iOS version, even the Kindle Fire version, we got a version for you. That might be one of the easiest ways. Some of you really want to go deep back into the archives. I was talking with some of our web designers the other day, and our archive is so extensive it was breaking part of our site on the network feed. So we had to, even on our own site, limit the network display to the most recent 100 episodes. We have 10 years worth of content listeners, so it goes back quite a ways. So it's some of the easiest places to get these things are actually via the app, which can display them all. So grab that if you are so inclined. However you listen to us, whether it's live, usually on the weeklies, or on demand on iOS or on the app, however you listen, hit us up with your questions, your comments. We love to hear from you guys. Quite a few of you have done that, so we're going to answer a lot of your questions this week. But before we get to that, I am not alone out here in scenic and San Diego. Nope. Mr. Corner Office hitched a ride out here as well, talking all things VIX. Mr. Russell Rhodes, a senior instructor over there at the Options Institute. Mr. Senior Instructor, a.k.a. formerly of Corner Office, now in this fine conference room with me here in the Hotel del Coronado. Welcome back to the Volatility Views program.
I am thrilled to be here. I'm thrilled to bring myself in off the beach to spend an hour talking to you about volatility.
It is a fun thing to do. And of course, this program, as always, brought to you by our friends over there at CBOE Live Vol. Ironically, Russell and I were kind of at a conference, conference Wi-Fi, not the best. So we're kind of limited in how much data we can get, but you guys aren't. Head on over to livevol.com. Kick the tires for yourself. 15-day free trial. It literally costs you nothing if you want to hear all the great data. We usually talk about on a show like this, realized vol, historical vol, implied vol, all this other fun stuff we talk about on a regular basis, comparing different products versus each other, open interest, etc. Livevol.com, the place to go. All right, and with that, we're going to dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
And welcome to the Volatility Review, of course, a portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling. This week, from a volatility trading and analysis and activity perspective, as I mentioned earlier, Russell and I have both been on the road quite a bit this past week. And where we are right now, we're kind of secluded, so our access to the data on the week is a wee bit limited. But that said, it has been an interesting week. Russell, one of the topics we've been discussing / debating, including extensively last week with our guest, Mr. Thompson over there from Typhon, has been the, shall we say, the somewhat aberrant, interesting, bizarre nature and evolution of the VIX futures term structure. There's been an extreme gap between the front month future and the cash for quite some time now, going on the better part of a month. I believe, correct me if I'm wrong, I believe it was somewhere that the height of it was about 3.5 handles, I believe. And then it got down to about the last show was about 2.5 handles. And we were kind of debating on last show, what would happen? How would that play out? Obviously, it had to resolve itself in the near future. Some way soon. Either the cash would come up to where the future was trading, or the future would come down to where the cash was trading. Maybe they would meet in the middle. Well, we have our answer this week, Mr. Rhodes. The cash went on a north side extravaganza, finishing the week at about 1612 or so. That is substantially higher. Not to preface the crystal ball too much, substantially higher than even our rosiest predictions from last week. You, the diehard vol buyer that you were, even you were several handles off in that factor. So I think a lot of us, our predictions should show you where we were leaning on that. We thought maybe it would be the other way around. The VIX future would lose a little bit of its luster, but c'est la vie, it did not happen, Mr. Rhodes. So it's been an interesting week. Walk us through again our ability to watch some activity has been a little bit limited, but this kind of development has certainly been interesting to watch. Certainly it surprised you as well. So what's your take on the week that was, sir, from a volatility perspective, as well as the ongoing dance between the cash and the futures?
Well, I think that everybody's focused on the election. There's an election coming up. You're aware.
I have heard rumors of that, sir.
Everybody's focused on the election and who grabs what and who does what and who says what and all that kind of stuff. And in the volatility space, I think that's what we've been attributing the steep contango to, was kind of bracing for some sort of move in volatility. And we started to get it out of VIX this week. I think it came earlier than a lot of market participants were expecting.
That's kind of what caught my eye. It came right at the start of the week, and I was just like, wow, this didn't waste any time at all disproving our crystal ball. No sooner as it came out on Monday, then the VIX cash said, nope, no thanks, here we go.
Well, all you got to do is the next time that I'm not the highest guess, that's when volatility is going to spike the next week.
Because Sebastian did scoop you to the upside.
No, it was not. It was.
Oh no, it was. Was it our guest? It was. Yes, it was a guest because you were 12.95 and he scooped you
at 12.98, and then I saw him at our event on Thursday night back in Chicago at CBOE, and he ribbed me a little bit about that one, especially because it was pretty apparent he was going to be right and the winner as well. But we got almost a 20% move out of VIX last week. I know Mark Sebastian hates when we refer to it as percentages, but you know what?
All the more reason to do it.
Exactly, but volatility is being quoted in index points. It's not, it represents a percentage, but it's being quoted in points, so point over point changes are percentage changes. And if you don't like it, send Mark Sebastian an email and just keep him all excited about that. We got less than a 10% move out of the October future, which does go off the board next week, I believe. The November futures were already at about a 3-point premium to where VIX where spot VIX was, and we did not get quite the move out of the November contract either. It was up less than a point last week. So the futures went out. I think more often than not, when we're in steep contango, the futures kind of went out before. Yeah, and one of the comments, and I know we're going to get to the different events that I was involved in this week, but one of the really interesting comments was from one of the managers that spoke at our Thursday night event. Just said that when he's a lot more comfortable selling VIX futures when VIX is down in the low teens, because you get a move out of VIX and the beta of the front dated futures is not quite as high when we're down in the lower teens than when we're like in the 20 and 30 range. So
interesting point. We've heard variations of that theme before of the cliche conventional wisdom is sell VIX when it's high. Obviously, like any other asset, buy it when it's low. But we've heard a lot of people, I think you and Sinclair said that a couple of years ago on the show, he got a lot of flack for it. But, actually it's kind of sometimes the opposite, where when it gets low, you're right. Selling the futures or the options is a decent time. And actually, to the upside, the inverse is kind of true. That's sometimes when it can continue. The highest probability of it continuing to outperform to the upside is when it is up in that range. So it's a little bit counterintuitive sometimes. And whenever we tweet that out or put anything out along those lines or discuss it on the show, I'm sure next week we'll have a lot of people writing in with all sorts of contrary opinions on that. So it's a very contentious issue, but it's an interesting one.
Well, when VIX is low, more often than not, the relationship between VIX and the subsequent realized volatility is a pretty widespread, believe it or not. And it's just, I can quantitatively show that it's easier to sell volatility when volatility is already low than when it's high. When it's high, it's actually high for a reason. And I just like regular market participants, those that aren't as smart as the volatility players have been conditioned to buy any dip in the equity market. A lot of volatility players have been conditioned to sell any spike in volatility. And as my predecessor Jim Pittman liked to say, everything works until it doesn't work. And there is going to come a time when fading any move in volatility to the upside is not going to work. And people are going to say, but this always works. And then they're going to double down and it's going to be even worse. So, everything works until it doesn't.
What's the old saying? On a long enough timeline, everyone is going to be right eventually, right? So if you really heavily believe in mean reversion and you have unlimited funds, then yes, you will be proven right eventually. But for the 89,000% of the rest of you out there, that's going to be a huge dent in the old portfolio. Speaking of the portfolio, Russell, you've been going around hither and yon, not just here in San Diego, but you were talking here last night as well. But you guys also had a great event, which unfortunately I had to miss because I've been out here at the CBO, actually not last night, but Thursday night. I'm thinking we're still doing it on a normal Friday time slot, but we are not. So walk us through some of these events and these presentations. I thought that one you gave here last night in Stocktoberfest was also very interesting. But let's start with the Thursday event. What was it? What was it about, and how did it go?
Well, we were teamed up with RCM Advisors. I believe it's advisors.
We're familiar. RCM Wealth Advisors / RCM Alts / RCM Futures / all of the above. They have many different names.
We teamed up with them. We had about 60 people in the audience, and I did about 30 minutes on what VIX is, just to get everybody up to speed. And then we had 4 portfolio managers that all have different approaches to VIX. We even had Larry McMillan, of all people, on the panel, and Mike Thompson, who we mentioned already. And they just went through their different approaches to either selling or actually possibly being long volatility. McMillan is actually, he uses VIX to try to benefit, or to try to, he's very much of an option seller in the SPX complex. So he uses VIX as a hedge for when his normal strategy does not work out, and usually has some sort of long volatility overlay relative to his short SPX option contract positions. And it was pretty interesting to hear him talk about that. And he's actually
call as a kicker type.
Well, not necessarily as a kicker, more of as an offset when things blow up on him to the downside. So it was interesting to hear somebody that actually has that I don't want to say benefits, but gets the offset benefit of a spike in volatility in conjunction with a couple of guys that really are consistently trying to take the other side of any moves in volatility or benefit from low volatility.
Yeah, Larry's, I remember he does like his premium selling. I remember sitting next to him when he got his the options industry equivalent of a Lifetime Achievement Award, the Sullivan Award at the Options Industry Conference a few years ago. I believe it was back in Savannah. And I was sitting next to him at his table right before he got his award. And that was right around the time that weeklies were starting to come back to life in the marketplace, and they were adding new weeklies, and they were taking off. And he was almost literally salivating at the amount of decay he was collecting with those weeklies. And he couldn't believe that anyone would buy a weekly. So, yes, he does like his bit of premium harvesting, shall we say.
So it's funny that he couldn't believe anybody buys weeklies, because we actually do see net buying of weeklies from the public still,
really?
As far as the equity weeklies go. Yeah, people are using them as a short-term stock substitute as opposed to trying to take advantage of end-of-life time decay, which is what I thought would be the common
That is very
use.
surprising, because I know a lot of the previous use cases have been, vast majorities of people hitting the bid as soon as it's listed, and then watching and praying that it would go to zero in a quick hurry. But yeah, so Larry uses the VIX calls as not so much a kicker, you're right, but more of a inverse kicker. And things go bad, I guess you can call it a bit of a hedge, even though I take issue with the VIX hedge notion. We'll get to that later in the listener mail.
Well, he said, if we get enough of a spike in VIX, it actually goes from offsetting some losses to creating a gain when things are not working the way that they have for him in the past.
Nice feature of VIX. When it does outperform, it outperforms in spades. And if you have that long leg on, you're right, it can erase some of the other losses in your other legs. You mentioned Larry. What did some of the other guests have to say at your event?
Well, we had Mike Thompson talking about how, and he really
was. I'm not familiar with him.
You're not familiar with Mike Thompson. He was here last week as well.
Oh, that's correct.
And
how quickly my memory fades.
He spent a lot of time talking about how they benefit from, how they consistently try to be short volatility, and they take advantage. And he was the only one that talked about how they actually will take a look at what kind of flow is going through the VIX pit and maybe react a little bit to that. So they're being very, not just consistent, but very opportunistic as well. We had Timothy Jacobson from Pearl Capital Advisors and Brett Nelson from Certeza Asset Management, and both of them have a little bit different approach to trying to take the other side of volatility. It was really funny when we got the question from the audience. We've got a question from the audience about, do you prefer high or low volatility? Larry said he likes it if it goes high enough because he benefits from it. Mike and Brett both said that they're more partial to being in a low volatility environment that stays low, and Tim said he didn't care. It was really funny to hear him talk about, I don't care. I'm just there, and I'm always prepared to be short volatility. If it goes up, we're doing the same thing that we're doing in a low volatility environment as well.
Those Typhon guys like anything that lets them set up for their creatively named strategies, which I believe they've been favoring their Tulum of late, which is the reverse mullet.
Reverse mullet? What does Tulum mean?
It's just mullet in backwards, a.k.a. reverse mullet. Right? If you spell mullet backwards.
I'm such a numbers person.
Tellum. It is Tulum.
I did not.
Yes.
I'm slow.
You're right. You are the...
I'm slow to the uptake. I didn't realize that it was spelled backwards. Oh, my gosh.
There we go. Learning, that's your one to grow on for Russell for this week. Typhon boys, keeping him on his toes with their naming conventions. But interesting stuff. And then you did do an interesting quick hit. If you want to run down some of it from the Stocktoberfest here, you were kind of talking about some interesting, I think, misconceptions that float around the VIX.
Yeah, they gave me 15 minutes that got cut to 10 minutes to talk. And
summarize all of VIX in 10 minutes. Go.
And I was trying to think, it's a little bit higher in crowd here. And so I tried to do something a little bit different because I've already spoken 120 times on VIX this year. And I wanted to change it up for me, I guess, because, it is all about me. So I did 5 common misperceptions about VIX, just kind of, and much like, the Cosby Kids. We're going to have fun and learn something at the same time.
I don't know if that reference is as popular as it once was, shall we say.
But like the Cosby Kids, I wanted to have fun. And so my first one was VIX is a great market indicator, which is a misperception. And the reason I said it was a misperception is because it's a relative measure. It depends on the environment that we're in. 20... In 2009, when we broke below 20, that was considered low for VIX. And now whenever we even get close to 20, that's considered high for VIX. So you got to look at it relative to what's going on in the world. You also got you're doing yourself a disservice if you look at VIX and you don't take a look at what it's doing relative to the futures contracts. And what we talked about 10 minutes ago with respect to how steep the contango has been, and even though VIX was in the 13s last week, the October contract close to 16, the November contract above 16 a week ago, that's so what if VIX is around 13 and kind of at the lower historical end? If the futures contracts are elevated relative to the spot index like that, whoever they are braced for something. And lo and behold, VIX puts up a 20% week this week, and the equity market comes under some pressure. So it's not so much that VIX is not a good market indicator. It just needs to be looked at relative to other things. The biggest, I probably should have made this one number one, but I wanted to start out with one that was pure VIX. But I did say that my number two misperception in the world about volatility is that VXX is VIX. It is not VIX. It is, and I'm pretty certain if Mark and I are doing our job right here, that everybody listening to us right now knows that VXX is comprised of the VIX futures.
We have hit that point once or twice.
I know we have, but I had somebody come up to me this morning. Actually, I've had two people since I made that presentation yesterday afternoon that said, I thought VXX was VIX.
I bet you if you polled the audience, because it does so much volume, if you polled the traders of that product, particularly on the retail side, I bet you the number would be staggeringly high, maybe a quarter, who knows?
You know what might be a good poll is we say, how long ago did you learn VXX, and give a couple of ranges, over a year ago, 6 months to a year ago, over the last 6 months, or the last answer would be VXX isn't VIX with a question mark?
Maybe, I never thought about this till just now, but maybe that product is so successful just from ticker symbol. It's the ticker symbol was early enough, A, B, it's close enough to VIX to cause a severe amount of confusion. Maybe that's the secret sauce to VXX.
That's true. When the prices are the same, I wonder if it makes it worse.
Yeah, that would be an interesting study, because I've always kind of scratched my head in just bemusement and just bewilderment at the paper that VXX puts up on a regular basis. And I often wonder what percentage of that flow is informed of how that product performs. I think it's a higher number now, thanks not just to shows like this, but the broad media is kind of always hitting that drum now. To their credit, whenever they talk VXX, there's that disclamatory paragraph, this is for short-term use only. So I do like to see that. I'd like to think we played some small part in that, but still.
I try.
Yeah.
Well, and if you don't believe it, last week, VXX was up 5.3%. And as I mentioned earlier, VIX was up just a tad under 20%. So if you didn't know it before last week's a great example of what VXX really is. And just so that we clarify it for the umpteenth time, or 100th time, it gives you exposure to the front 2-month VIX futures contracts. It does not get, which we've also mentioned today, went up a lot less than VIX because we were in such steep contango. So if you were thinking of it, and one of the arguments people pick on us on Twitter, don't they? They pick on me more than you.
They do. I do want to say, do like to pick on you on Twitter.
I know. I don't know. I'm a nice guy.
You've attracted an interesting audience, shall we say?
I'm
on Twitter.
Nice. My kids like me, and we
get great feedback and questions and insight, and you get vitriol.
I get vitriol.
Maybe it's the glasses.
But I used to tweet out. This was my subtle way of letting everybody know what VXX really is. And like on Monday this past week, I would have said something like, VXX, going into the day, VXX is 33% October VIX futures and 67% November futures. And I would get 2 or 3 comments like, who cares, why does it matter, and things like that. Well, if you're going to trade the SPY ETF, you probably want to know what the big stock, or, we'll come up with a technology ETF that is 70% of it is 3 stocks. You probably want to know what those 3 stocks are, and you want to know what the underlying is. You shouldn't be trading VXX if you don't understand the contango part of VIX and how that has an impact on VXX performance. How if the futures are already discounting a big move out of VIX, as they have been, you're not going to get the benefit that you want. Also, if VXX is weighted more toward the second month is just about always less responsive to VIX than the front month. Another reason that VXX will underperform VIX on a move to the upside, especially when we're getting close to, when we got about a third of the time to go to October expiration. You should understand those things. And I was doing a public service by tweeting that out almost every morning, and I got beat up so much, I just stopped.
I think some of it has to do, obviously, you're over there at the Options Institute with the CBOE, so I think a lot of people maybe obviously mistakenly assume that you're there also determining VIX settlement and everything else. So you get a lot of those people who are chiming in angry at the world over those prints, and we don't get as much of that. So I think that's a nice thing about being an independent third party. We don't get as much of that hate rolling our way. Speaking of things rolling our way, well, first off, thank you for that, Russell. So listeners, if you couldn't be in San Diego or Chicago, there you go. Your synopsis of 2 events in about 10 minutes or so. We just saved you thousands of dollars on travel and admission fees. And now, because you guys have asked for it, and because our data connection is spotty out here, we're going to work through our massive mountain of listener mail. So without further ado, let's dive right on into our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail. This is the portion of the show where you guys take the reins. More so this episode, you guys have been asking us, hey, hit my question. So we're going to do just that. We're going to go in order of whenever they came in. So more recent will be favored. So some just came right before the show started, including we're just talking about how much hate you get, Russell. This, our friend here, Bill Chace, deeply offensive to me. He writes into my own show, and he sends a question to you. He's like I'm chopped liver or something. He says, hey, hi, Russ. That's how he sends his question. Hi, Russ. So I guess you can I'll just go step out.
It was a tweet. He had to shorten things.
I'll go get some lunch, and you can just run the rest of the show here. He says, hi, Russ. What indicator do you use to help determine future movements of VIX, and how reliable are they? Easy for me to read. Thanks. So I'm just going to step back because he didn't even include me, and I'll let you have at it with your good bosom buddy here, Bill Chace.
Hey, Bill. It's been a while since I've updated the numbers, so I'm going to have to gloss over the reliability part. But I think the best indicator with respect to where VIX might be going, it really is the futures contracts. And I did create something called the modified VIX future. I need help from marketing when I make new things and come up with names for them. That isn't the sexiest name in the world. I know, and it's basically a time weighting of the front 2-month VIX futures contracts. It's a way to quantify contango or backwardation, and it does a pretty good job, not necessarily timing wise, but it usually stays at a premium, or when it is at a premium, like it has been, the result is more often VIX moving up than the futures adjusting down. So that's a fairly reliable one. For the academic program that I'm involved in right now, about a year and a half ago, I did a paper on VIX, and this hasn't been published anywhere. It hadn't been accepted anywhere yet, but the reliability of VIX as far as a predictor of future S&P 500 volatility. And it's fairly reliable, but I was running other of 30-day implied volatility. And I was running other tests, and what I actually discovered in that study was that if you combine VXV and VIX into a single indicator, giving more weighting to VIX, but putting some weighting in there for VXV, you actually get a better predictor of subsequent 30-day implied volatility out of the equity market. But I also found out that VXV does a heck of a job. The difference between VXV and VIX does a heck of a job of predicting future movements of VIX. And that is really, and VXV is a 93-day version of VIX. VIX kind of leads what we're expecting from the markets. VXV actually leads VIX, and that's why together they work as a pretty good indicator. But VXV is actually, the difference between VXV and VIX is actually a good predictor of getting a spike from VIX sooner rather than later. I think I'm going to update the numbers for that when we get through the end of 2016. And see if I can shop that one around to the academic paper or the academic market once again. But yeah, one of the best predictors of VIX is actually VXV.
I'm going to offend Bill, and I'm going to answer his question
You
too,
can
even though he didn't even ask me when he writes into my own show. I'll remember that, Bill, for future episodes. But this kind of goes back to what we were talking about on a couple episodes ago. In fact, we even titled the episode, "The Answer to All Volatility Questions is the VIX Futures Term Structure." And that is, yet again, I think the primary answer to Bill's question. Look at just last week. Is there a better example than just last week of what was the major indicator that something was going to happen out there? It was the futures. The futures were lurking anywhere from 2.5 to 3.5 handles above the cash. Lo and behold, they came together. I think we were, like a lot of people, surprised by the velocity and the timing of the move, but the fact that it was going to happen and the level was not, I don't think, a surprise to anyone. So the futures, particularly in VIX land, tend to dictate all. You're right, Russell. There are other things we like to look at too. It's not all VIX futures. We talk a lot about some people will call it the reverse skew out in VIX, or the relative weighting, how call heavy VIX is in the options versus the puts, and that obviously will vary depending on month and everything else, seasonality going on out there, and the volatility of VIX itself. So there are a lot of other indicators. VVIX, we mentioned that many times here on the program, but yeah, the mother of them all is still the VIX futures. You can start there, and you don't have to end there, but it's going to be the leading indicator. Everything else is kind of like the seasoning on the steak afterwards. You want to add a little bit of salt. You want to add a little bit of maybe a little bit of pepper, which is always nice. Maybe some Vesuvio if you lean that way. Though that's what these other indicators are. They're the flavoring. They're the sizzle, but they're not the steak. All right, next one up, Bobby, the creatively named Bobby. I like it. I like the simple handle sometimes. He asks, I've noticed moves in the currencies lately. Well, you are not alone, Bobby. And he says, is this increased volatility good for premium sellers in currency options? This has been an interesting phenomenon to note. We don't talk the currencies a lot on this program, more on some of our other futures options-oriented program. But in general, Russell, certainly post the black swan of black swans, I've heard it called, the old Swiss franc. And of course, this year with Brexit, we've seen a couple of massive, mega standard deviation events that have really just juiced the entire sector back to life. For the long time, for the better part of the last half decade, if you were looking for places to harvest volatility, the currencies were a wasteland. There was no vol to be found. There's no appreciable movement to be found. And the last year and a half or so, that really seems to have changed. And it has been certainly a much better volatility environment for premium harvesters, unless, of course, you were caught on the wrong end of that black swan of black swan, or more recently, the wrong end of Brexit, which we did see. How many people we commented on this show, not particularly in the currencies, but in the broad VIX, that people were crushing vol going into that announcement, and we were all kind of questioning as whether that was perhaps the wisest of choices. So there were vol sellers. I didn't get a chance to check the numbers in say pound dollar or euro dollar, but I'm sure we saw similar developments out there. In which case, for those specific folks, no, it was not a good development. But in general, this increase, it's made this whole sector kind of come back to life. I can't remember the last time before this last year and a half or so where we really had any reason to discuss currency vol in any real appreciable format. So from that perspective, it certainly has been interesting. I know, Russell, you follow a lot of different esoteric indicators, including some currency VIXs out there that you guys disseminate out there in CBOE land. So what do you have to say here for our friend, the creatively named Bobby?
Well, we were at risk management in Europe. We're confused on the day of the week, and I'm confused on where I've been over the past 4 or 5 weeks. I don't know what day or what time it is, what my name is. Yeah. So, and people think that we're oceanside, but we're actually in a basement.
Yeah, that's the downside of doing audio. You don't get to be in the cool venues.
But when risk management back, I think it was just after Labor Day or right around then, we had different entities talking about, other markets. And there was some discussion around the currency markets, and they just said, the volatility is consistently overpriced, but when you've got, implied vol is 6 and realized vol is like 5.5, you're taking on a lot of risk there for a very small gain. And of course, anybody that's a volatility seller is going to get run over every once in a while. The thing is, since then, and actually a follow-up comment on that was if we could get volatility to continue to be overpriced, but maybe at more of a VIX-like level, it might be a more attractive market to go into. The past 3 weeks, the British pound VIX has been on one of the bigger movers, and it's actually finished the week at 1347. Coming off of a 52-week low of 382. Can you? I mean,
that goes back to what we were just saying. Yeah. The wasteland of volatility.
But if we could get into a regime where instead of this being, and I think the move in the British pound VIX is a couple of things that are going on geopolitically that are frightening the currency markets. But if that could become a consistent level, and you get a consistent overpricing of 1 or 2 vol points, then it's probably a better area to consider trying to, as the quants like to say, harvest the volatility risk premium. When we're in kind of what's been a normal currency option market over the last few years, I don't know if the risk reward of trying to harvest the volatility risk premium in the currency market has been a worthwhile venture.
It's a very euphemistic way to put it. Well done, sir.
Yeah.
You've earned your Options Institute hat for this episode. Well done. I like it. Moving on. A lot of people have indicators on the brain these days. This one comes from Vegan. He loves his sizzle on his steak as well, obviously. He asks us, do you use VIX as a relative strength indicator versus the S&P, the big S&P futures? What tends to lead the dance? S&P, or VIX. It's actually, before we get to that, Russell, this kind of brings to mind an interesting thing I don't think you and I have talked about. My views on technical analysis I've espoused them many times over here on the network. I'm not a huge fan, shall we say, but I'm curious, where do you fall on that debate? Are you a technical guy? Are you more a fundamental guy? Or do you poo-poo both? Do you like wizardry? What is your approach?
I challenge you to a technical analysis duel. I'm a big fan of it, actually, but I think it has its place with respect to the fundamentals. Probably the best places that I worked on the buy side, we would combine both. We would have fundamentally solid stocks that we liked. We'd have stocks that we weren't particularly wild about, and we would actually use charts to pick our entry and exit points. So I do think I don't think it's a good pure trading vehicle, except for maybe very short-term trading. But I think it has its place. I don't think that it's completely useless, but I don't think that it's the golden ticket either. I think it's usable, but usable as a complement to other types of analysis.
Let me tell you why, just to reiterate why I developed this dim view. I think a lot of guys who are traders, in and around the trading floors, I think tend to have that perspective. And for me, it's because it got beaten out of me. I was a fan of technical analysis early on, and then it slowly over time on the SIBO and different SPX, and then of course getting into the equities, it was slowly beaten out of me because we would try to use it as most options guys would to try to plan our gamma scalps. That was the most useful way to do it. So you're trying to work your levels, obviously, to be able to gamma scalp. And myself and every other person around us was trying every other model you could think of and everything else to work your orders. And pretty much the return on those was a whopping, 2% or something anemic, to the point where it was really the guys who went with their gut and seemed like most did a lot better 90% of the time. So that kind of beat a lot of my technical analysis interest/love out of me. That said, I am willing to concede that that's a very short-term intraday use case, and some technical indicators may be better on the longer term than that. But I think just day over day over day of watching that fail for many, many years over there on the SIBO really kind of beat my love for technical analysis out. But I'm willing to be turned to the dark side if someone can come up to me and say, hey, here's this magic solution. Here's the magic indicator that actually works. I've often said that if you could have a banana and apples indicator, it doesn't matter what the hell the indicator is. If people follow it, it may have some actual utility in the marketplace. So that's always been interesting. Getting back to Vegan's question, we kind of went on a bit of a tangent there, but always interesting to me to see how people view the marketplace. He wants to know what leads. Let's start with the latter part, because that's kind of the more, I think, contentious debate. We've talked about this before on the program. It's been a little while. This is kind of a common question we get a lot. Is the tail wagging the dog? Is the VIX leading the S&P, or vice versa? A lot of the conspiracy-minded folks, the tinfoil hats, the zero hedges of the world would like to have you believe it is the latter. It is the VIX wagging the S&P dog. We've seen a lot of interesting data around this over recent years. A lot of it seems to tend to say that it can, some of the paper in the VIX, the myriad legion of VIX ETPs can certainly, let's say, exacerbate some of the last end-of-day movements, get a little bit of gamma action going in there. But I think maybe you disagree, but I think you're on the cooler head level, Russell, that the tail wagging the dog, probably not. But what are your thoughts on that? And also, since you're the technical guy, what do you think of using VIX as a relative strength indicator versus the S&P itself?
It's funny that question is on my to-do list before I got that question. I think I actually do want to take a look at the relative strength of VIX versus the S&P 500, because I've got some thoughts around that. So I will come back to that at some point in the future. The S&P 500 leads VIX. The big moves that you get out of VIX do not occur until the big moves have started in the S&P 500. I don't think that there's any evidence that VIX has any that what VIX is doing has any influence on the S&P 500. I don't think it has any influence on the S&P 500 option pricing either, because we've seen the same sort of range in implied volatility in the S&P 500 in the implied vol from before people were paying attention to VIX and after people were paying attention to VIX. I don't think it has had. I don't think it's had any influence. I don't think anything's really changed, other than we have an indicator that tells us what's going on, with a consistent indicator that gives us an idea of what's going on with SPX option pricing.
Yeah, it's interesting. This question I don't think will ever go away. There's always going to be these conspiracy theorists out there that think the VIX drives the S&P, which I think, as you just mentioned, it is demonstrably false. I'm willing to be a little more open-minded on that. Some of that end-of-day fluff, there's a lot of contributors to that. We've seen a lot of different interpretations of what that's coming from. We can do that on another show. It's a long conversation. But instead, rebalancing a lot of different products, hedging their gamma at the end of the day, all coming together at once, which is kind of interesting. Instead, we'll move on to a comment here from Itzprav. Maybe I'm saying that right, I'm not sure. This is in regards to, we were talking about last week on the show, we were talking about how high. We actually put out a headline that we were talking about on a lot of our breaking news in the options market. It was an article entitled, "How High Will the VIX Get?" Something we were talking about on the show last week as well. And our friend here, Itzprav, he was fading us to the downside. He thought we were selling VIX with our guesses of around the 12 handle or so. He was saying last week, or coming into this week, he thought VIX is going to be back to 11 next week, which was, in this case, last week, because it came in about a week ago. So he was fading us more aggressively, fading the VIX more aggressively, I should say, and he's probably feeling that pain even more than we are, and the shame even more. That's why I wanted to bring him on the show, so he could feel our shame as well, Russell.
I want him to do the contest.
The crystal ball?
Yeah.
We'll have to add him in. We'll have to get Itzprav.
We need somebody that's worse than I am at it.
Well, you're consistent.
I know that was mean.
You're consistent, if nothing else. You are consistently buying volatility. We all know how well that's worked out for the lion's share of 2016. But maybe you're coming into your Q3, Q4. Maybe this is your time to shine, Russell. Maybe this is it. I think they hit on this one on option blocks. I think they send it into both shows. So we'll save the strangles for a little bit in case we need it at the end there. But instead, I'm going to hit on this one. If you come into handle Highlander, you're going to get on one of my shows. That's one of my favorite movies of all time.
Oh, Highlander.
There can be only one, Russell.
Oh, my God. Muster all of your energy at one key time.
Sean Connery
pushing that thing up while everybody gets
as a Scottish Egyptian. There's nothing like it in the history of cinema. He didn't. He never got rid of his Scottish accent, even though he was an immortal Egyptian.
I gotta watch Highlander.
I'm sorry.
I'm gonna make my kids watch Highlander tomorrow night.
He's a Spanish Egyptian in that movie by way of Scotland. It's fantastic. And Christopher Lambert, a Highlander with a French accent. It's fantastic. 80s cinema at its best. But I digress. We can do a whole show on how awesome Highlander is. But there could be only one show about it. All right, let's go on. He's commenting as well. We were talking about this on some shows last week about the whole Deutsche Bank kerfuffle, shall we say, Russell? Big issue out there. We were joking about how much debt is out there, and the notion was $46 trillion in notional exposure. Some people were saying, oh, well, it's only $46 billion if you knock it down or something like that. And Highlander, he writes, it's only $46 trillion backing mortgages and loans for hundreds of millions of people. It'll be fine. He doesn't think he was, I think, being a little bit snarky there. Maybe one of your followers, Russell, chiming into our show as well, because a little bit of snark. But he's saying, yeah, Deutsche Bank, it's not going to blow up. But that, of course, has been a big driver of volatility of late as well. This notion of, will one of the biggest players in the marketplace effectively go away? And what does that mean for all the counterparties and everything else that's going on out there? There's a lot of interesting notions, and that certainly has been playing into this ever-increasing level of volatility we've seen out there of late. It seems to have the impact of DB probably stronger a week ago than it is now. It seems like some of those issues are getting a little bit, not resolved, but at least mitigated somewhat. So we'll see if that continues. But yeah, the Deutsche Bank certainly has been a driver of vol. Here's a good one for you, Russell. This is from another creatively named LV87. I think you mentioned these actually in your presentation yesterday. He asks about the single name VIXs. What's up there? Can I actually buy Amazon VIX? Seems like we get this question or some derivation of it like at least once a quarter here on the show. And these are products, obviously, if listeners are not familiar with them, these are, I put products in quotes, they're indices that you guys announced, I don't know, 4 years ago now, something along those lines. It's been a while. Back when Apple was really tearing it up and pushing the 700, that's when you guys announced, I believe it was an Apple VIX, a GL, the Gold VIX, the Amazon VIX, and a handful of others. I'm forgetting which other ones there were. And they were actually obviously designed to do the single name. VIX. So tell our friend here, LVA7, what's up with those, and can he go out? Can he actually go buy an Amazon VIX if he is so inclined?
Well, we've got 29 volatility indexes.
Is it that many now?
Goodness sakes, somebody invent another one so I can say 30. It really, 20, although I guess 29, there are lots of people that just say they're 29 forever.
Let me put my hat in the ring then for what I mentioned earlier, my bananas and apples VIX. I think that would be a very useful indicator.
Somebody actually recommended, and I'm apolitical, somebody actually proposed a Trump volatility index.
That would go in line with our Trumpocalypse notion from a question from 2 weeks ago, where a lot of you guys thought Trump was going to spike the VIX over 20, and he's doing a darn good job of it so far, getting there.
Well, so we've got a whole lot of VIXs, and we have 5 on individual stocks: Apple, Amazon, Goldman Sachs, Google, and IBM. And basically, it's just applying the VIX methodology to the standard option contracts, coming up with a consistent 30-day measure. They're an awful lot of fun to look at because they go up every 3 months and then drop like a rock. So they're great teaching examples with respect to how how volatility acts going into and coming out of earnings announcements. There's not a tradable derivative of Amazon VIX. I know that it is something that our research department has worked on in the past, so you never know. That could come out in the future. So you can't actually buy Amazon VIX. I think if you want to get long volatility exposure to Amazon, you got to go old school and buy a straddle or something like that. So
you're no fun. You're the wet blanket of the show, Russell. People want to come and buy an Amazon VIX. Tell them how they could do it. I will say though, there are some stealth use cases for these. You may be trading something related to this and not even be aware of it. For example, our friends over there at Options Express, they created their Idea Hub. And the Idea Hub, for their premium harvesting section, which I know a lot of people are interested in, that pretty much keys off of the single name VIXs for those different names. So when they're suggesting and analyzing different premium harvesting opportunities, it's pretty much limited to the universe of names that have single name VIXs on them, because they can use those as an indicator. So if you've been trading through that, taking some of their premium harvesting suggestions or some of the other categories there, you are actually trading off of the single name VIX that's being disseminated, even if you're not as LV asks, you can't actually go out and buy it. You can actually use it to trade in some interesting. I'm sure there are other indicators, other models that are using it out there as well. That's one of the more popular ones I'm aware of. All right, we got a bunch of questions, or excuse me, comments coming in, Russell. See if we can burn through some of these as well. This is my favorite comment question of the week. This comes from J. Call 2000. And he sent it to both of us, our show and to you, so clearly he wants us to answer this. And his question, Russell, are you ready? His question is DMC XKXJZPO. And I tried, it's from Polish, I believe. I did try to translate that. And surprisingly, a string of consonants is gibberish in every language, not just us. That said, maybe there's some secret code he's trying to send to you, Russell. So have at it, sir. Decipher this.
I'm trying to do it in Roman numerals. And
he's actually sending us a great trading
He's sending us an ancient aliens thing.
This is genius.
You know,
can't decipher it.
You know, it's like don't send it in secret message. If you've got something to tell people in the future, just leave them a note.
Yeah, you don't need a time capsule. You don't need some weird cryptic Aramaic script or hieroglyph. Just send it to them. You're right. But then we will lose the plot of 90% of our movies out there, Russell. So what fun would that be? All right,
let's go with Kid Sinclair. I want to go with Kid Sinclair.
All right,
I love him.
We'll go with Kid Sinclair. He sent this.
I know him.
He sent this to both of us as well. You and the show. He wants to know, when does your new album drop, Russell? I love your latest single, F the Maintenance Call. Was that inspired from Brexit? So first off, you get a lot of our questions on our show, so I'm feeling the love. And then B, when does your album drop?
You know what he sent me for Christmas?
He sent you a Christmas
gift. He sent me the best Christmas gift ever. He sent me a plastic replica of Gordon Gekko's phone from when he's on the beach talking to Bud Fox. And whenever I want people to leave me alone at work, I just walk around and hold that thing to my head and act like I'm talking to it.
That was the one good part of the Wall Street remake.
I know.
Did you see that
when he gets his phone back?
That was the one good part of that movie.
But I am not musically adept at all. My latest single. Just love that.
That's how you do tweet out a lot of musical things, so people follow you. They do get a good selection of your broad and diverse music taste. Shall we say?
He knows the way to my heart as well. He's in the Bay Area, and he will bring me he'll bring me In-N-Out Burger in exchange for discussions around options. So
maybe he's at the event here today. It's not that long of a drive.
No, he didn't come down here for this. Okay. He said he's had good times here before. Was sorry he couldn't make it down here.
So for all those out there waiting for your musical debut, it has been postponed indefinitely. All right, Mark Brandt writes in a lot. Just commenting that he says what we were talking about earlier, the VIX reverse investment skew is a gold mine if you can see the big picture. So I'm not sure exactly what big picture he's referring to, but that does kind of get to what we were talking about earlier with with VIX kind of just being so call heavy. It is very much the opposite of what a lot of people are traditionally come to expect. The traditional investment skew, which is of course premium to the puts, discount to the calls from a volatility perspective. VIX, a little bit of the opposite. So if you can wrap your head around that, if you can roll with it, then it is indeed perhaps a gold mine, as Mr. Mark here. Speaking of reverse skew, this next question from, I like this handle, Billy Vanilli. That might win the handle award for this week. He's talking about that reverse skew as well, or maybe the impact therein. He writes in, I'm a bit confused. Why do so many people trade that 1x2 call spread in VIX? It seems like you guys discuss it on every show. Is it really that effective? What am I missing? And maybe just the volume alone, Mr. Billy Vanilli, could tell you that it perhaps is interesting. The analogy that I use for this, Russell, and I'm sure you probably have your own, but the one I like to use for this that kind of, I think, breaks it down to the level people can understand. I know people in the option space bristle whenever you make any sort of analogies to casinos or gambling, but I'm going to do that anyway. Bristle away. But it's like when you go to the casino and you're playing a high-end table game. Your job there is, of course, stake management. You want to be at the table managing your table stakes until that hypothetical moment when you have the perfect hand or the perfect whatever it is that you're playing, and you can maximize your wager and really knock it out of the park. And that's in a similar way, that's kind of what this 1 by 2. Obviously, it's short 1, long 2. And that's kind of what they're doing here. They're managing their table stakes, keeping themselves in the game when and if VIX does have those moments of dramatic outperformance. We have seen that. We saw it very dramatically a little over a year ago, last September or August of last year, when it exploded to the upside. That's when the strategy knocked it out of the park. But that's effectively what this is you're collecting a little bit to do it, sometimes depending on the strike selection and how you do it. Sometimes it's a little bit of a debit, but a small debit, nothing aggressive. If it goes against you, the amount that's going to go against you isn't that bad. There's a limited universe of scenarios where this thing will actually hurt you. And in the long term, it helps you manage your exposure. Because you can, obviously, Russell, everyone knows the way to win with VIX is to have that call leg out there when it blows up. But if you just go buy VIX calls every month or every quarter or, God forbid, every week, your table stakes are going to erode very, very quickly, and you're not going to be there probably for when the home run happens. So this is one way to keep you in the game until that happens. And it seems to be very effective. And I think just the broad adoption of it, if anything else, shows that's not. We've mentioned it before. It's not universally effective. There are setups in the VIX futures where it's more advantageous than less. But that said, it's one of the better table stakes management strategies I've seen come around in VIX in a while.
Yes.
What are your thoughts here for Billy Vanilli?
Girl, you know it's true.
Yes. You know you're going to tweet a Milli Vanilli song after this on your SoundCloud or whatever you Spotify.
You and I could be the next incarnation of Milli Vanilli because all we got to do is lip sync.
Yeah,
I can do that.
We can do that.
So the real reason I think it's effective is the spike of VVIX that you get, because you're going to get a spike in VVIX, and when you get a move higher, we just had Mark Brandt telling us that, am I allowed to say his full name?
Yeah, sure.
Okay. Sometimes people send things in and say, don't say our names.
If they want that, they should tell us that.
Okay. But he said the investment skew is a gold mine, if you can see the big picture. And what he's talking about is that increase that you get as you go to out-of-the-money call options. So let's say you sell you sell a near strike call, you buy a couple of out-of-the-money calls, and you get that big old spike, and the spike's even between the two strikes, you're going to have such inflated implied vol on the out of the money or the higher strike calls that you got two of, you're going to make some money off of it. And the thing is, even if you go right to that strike and there's 2 or 3 weeks left expiration, there's a way to profit from that trade. So it's if you're going to hedge with VIX, it's a dynamic type thing where you've got to take some profits when you get the spike. We always show these payoff diagrams going through expiration, but you got to take the profits when you get the spike, and spikes benefit 1 by 2s. And if you don't get the spike, it doesn't kill a 1 by 2. Therefore, smart trade.
Yeah, it's a good approach. Well, Russell, we took a good chunk out of the mailbag for this week. The rest of these that we have here are pretty lengthy, so I think we'll probably save those can't really squeeze them in the time we have remaining. So instead, I think we'll keep on rolling. But keep those questions coming. We love to hear from you guys. Sometimes our mailbag gets a little bit backed up, as you can see, but you guys inundated us with so many great questions and comments and insights and cryptic messages. We love to hear from you guys. Keep them coming, even if you want to send them to Russell. I may allow it as we keep on rolling into our final segment, the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, Russell, welcome to the crystal ball, a.k.a. the segment of shame. Russell, we once again all aggressively faded the VIX, and it made fools of all of us. We were kind of weighing in our minds, at least I was, and I'm sure you were as well, kind of how that dance would play out, like you mentioned at the top of the show, between the future and the cash, how they would come together, how that union would work out, the velocity of it. I think the velocity surprised us. And also who ended up winning was a bit of a surprise, because VIX Future said, no, you come play with me. And that's exactly what happened. And so all of us were fading to the downside. I was, I think, on the low end. I was at 12.25. Of course, I said we closed a little over 16, I believe 16.12, so about 4 handles away. Mark Sebastian, a little more bullish than he normally is, about 12.75, still over 3 handles away. And our Russell, ever the bull that he was, 12.95, still over 3 handles off. Amazing how that comes off. And our guest scooping you, the boys over there at Typhon, scooping you to the upside, 12.98. That was pretty obnoxious and also pretty funny. I guess, I don't know how much victory there can be found in this because we all missed so badly. But that said, he gets the proud of place of being the closest without going over. Price of Right rules. None of us win. In abject terms, we all lose. But that said, Mr. Rhodes, I'll let you choose this week. Do you want to go
goes
first?
Well,
I kind of like going first sometimes.
I'm going to channel Mark Sebastian.
I'll let you have the opportunity if you like.
Well, I'm going to channel Mark Sebastian and have him go first.
Oh yes, the
can I do
ghost.
my Mark
I forgot.
Can I do my Mark Sebastian impersonation?
So the ghost of Mark Sebastian goes first. And I have a feeling, I don't know about you, but I think the ghost of Mark Sebastian is extremely bullish on Vol. I'm thinking like 28. What do you think? I think he's in that. Is that too low?
I've been saying all year.
Okay.
We're going to see a single-digit VIX.
Oh, you want to go the other way? You think he's fading?
And it's overdone.
Okay.
There's no reason for us to be at 16 at all.
I like it.
I've been selling it all day Friday. I'm selling it on Saturday. I'm doing a yard sale of volatility out here. Lauren's saying, get rid of all the volatility.
So about a 7.25, you feeling something along those lines?
I'm going with $9.99.
Oh, $9.99. You're being much more charitable than I would be for him, given the fact that it's his ghost.
Then I can do the victory lap with my single-digit VIX.
I love it when he's not here to defend himself.
It is fun. That said, the ghosts have done some surprisingly well for the absurdity of their predictions.
We're giving him $9.99.
$9.99 for the ghost of Mark S. I will go next just for fun.
Okay.
I was, like I said, I have been fading. My fading was a wee bit aggressive this past week, so I shall raise my fade. I don't think we're going to be here next week. We are in this weird position now where, of course, the futures perhaps not as predictive. If you believe the futures, then they're saying we're going to be around this level or a little bit higher for the near term. So if you believe that, then we're going to be up here for a little bit. I'm gonna say we're gonna come off a little bit. I'm going to go up to, but I'll be still higher than my recent predictions. I'm going to go 13.5. Mr. Rhodes, where do you fall in that wide gulf of $9.99 to 13.5?
I actually think we're going DEFCON 4, and this thing with Russia is going to escalate.
Apocalypse.
I do. I've been joking around as I go around the country all year that Vladimir Putin's going to do something someday, and that's what's going to make the next spike in VIX occur. And I was joking. I had no idea that's what it was going to be. And also the fact that we didn't go into any sort of backwardation, even though we got a 20% move. I think there's room for us to move higher. I know I'm always guessing high, but I actually think
you have faded aggressively higher.
Room. I'm going to leave a wide gulf for you to be the winner.
But then
I'm going to because it's Price is Right rules, right? So I'm going to take 17.
17. Huh?
I really am, and
you are buying. I will concede the no backwardation point. That was kind of interesting to me as well. We kind of went this far and no farther, which is not something you typically see when VIX moves that aggressively in the front month. It's usually going to go explode to the upside. We did not see that. I was kind of leaning that towards maybe a bit of the fade, but you could also see the other side of that, be contrarian and say that means there's just more room to the upside. Well, listeners, let us know what you think. You guys can play along in the crystal ball as well, and you guys can feel the joy and the shame, the agony of defeat and the thrill of victory that is the crystal ball. We need to determine a good prize for who wins.
The Vol Views home game.
Yes, play along at home. You too can feel the shame of the crystal ball. All right, that's going to do it for the crystal ball segment. It's also going to do it from this live to tape episode out here in scenic and sunny San Diego. Stay tuned to the network, by the way, listeners. We will have a lot of the panel audio and speaker audio coming from the Stocktoberfest event here. So stay tuned to that. Probably next week, as you hear this, the first episodes will be filtering their way out to our network. But before we go, Mr. Rhodes, what is cooking in the land of all things CBOE Live Vol?
I am CBOE Live Vol. Live Vol, brace yourselves for a big update. They got more work to do. They got a due date of sometime in November to roll out an update from Live Vol. They've been surveying a lot of different traders, and now they've gone back to work. And so expect, I don't know exactly what they're going to implement and what they're not, but expect a new, fresh version of Live Vol in the next few weeks. I am shifting over to academic mode and going to an academic conference in Las Vegas, of all places. That's where the academics go to load up and party. I'll be at a conference. I'll be dialing in from Las Vegas to talk to you.
So you'll be dialing in from the Spearmint Rhino for next week's show. Then.
So I've got. It's starting to quiet down. We've got an academic conference we're hosting at CBOE, but my year is coming to an end.
So next week in Las Vegas, we'll see if Russell is coherent for the show next week. That will be a fun. We know if Mark's on, he'll be in my studio probably drinking, so he won't be coherent. So the two of you together will make an interesting pair on the program next week. And on behalf of Mr. Rhodes and the ghost of the Greasy Meatball, who is fading ball so aggressively, and I would have made him more aggressive. I would have said about seven. But you were charitable, sir. So c'est la vie. He should be thanking you for that. And indeed myself. I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, for sending in such many and diverse and varied questions. We love you all. And we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.